let's also focus on industrial stocks now. Jefferies is bullish on Siemens, Thermax, ABB India and KEI Industrials from the industrial sector. The brokerage firm in its recent note has said that Q3 saw some sizable orders getting finalized for the industrial stocks, with a 30% surge in order flow year on year led by BEL. Amit Anwani, the research analyst for Prabhudas Lillader, joins in now with his call on the sector. Amit, if you can first give us an overview of why you're so bullish on the sector, because the problem that we're facing here is a lot of these stocks have rallied substantially in the last 1.5 years. So do you see both a growth as well as a valuation headroom now?
Right. Thanks, Sonia. Definitely, there has been a very sharp surge in the intake, despite for few companies there was a higher base last quarter, but we saw for many companies, including ABB Siemens, more than 35% growth for ABB. Even L&T on a cumulative basis now is giving the open guidance more than 20% growth, and this is also because the international geography is also supporting with respect to intake for many companies in T&D side, hydrocarbon side. So I think the intake for this quarter for my universe has grown by more than 28-30%. And many companies are now rolling with a very strong order book, the decadal strong order book, which gives very strong visibility with respect to the revenue. So barring there could be a near-term moderation which can happen in the domestic market because of the election transition. All in all, the commentaries for many companies still remains very strong, even for the domestic market now, and especially on the power, renewable, railway, metro, and the new age sectors like data centers. All of this is contributing significantly to the order intake of all industrial companies. With respect to valuations, definitely, if you see being an upcycle and the kind of visibility which is panning out, which is for many companies, it's a decadal opportunity which is coming. So past decade, many companies were doing hardly 8-10% volume growth versus now almost more than double digit. And even the product mix is changing. For example, ABB, we have seen gross margin improving significantly from 33-34 to 36-37. And even the top line growth has been more than 20%. So I think there would be valuation premium for companies who have been delivering. And there could still be scope seeing the opportunity which is panning out in the sector for next 3 to 4 years. Yeah.
Hi, Amit. Morning. Nigel on this side. Good to see you in. So further upside, you're saying for ABB?
Yes, so for me, ABB Siemens remains a long-term positive. If I come to ABB, if you see all the three business verticals, including electrification, which is now commanding almost 17-18% EBIT margin versus 12-13% 2-3 years back. And at the same time, the strategy of the company to penetrate into the tier 2, tier 3, tier 4 city towns with low mid-voltage product. And there's a lot of customer engagement where they're commanding premium and beating the competition in many fronts. So I think there will definitely be a premium in these stocks because they're technological leader, top 3, and the way the margins are shaping up, the product mix is shaping up. All the high growth segments are contributing well, including data centers, electronics, and renewables. So I think there will be a premium. But having said that, the current rally in this space in past 2 months, definitely there's some discomfort at this price. But I'm long-term positive on this space.
Okay, long-term positive on this space. All right, we'll leave it at that. Thanks a lot for joining in. Appreciate your thoughts here on CNBC TV 18. Well, that is Prabhudas Lillader with their view on the sector. But